Today I want to talk about two stocks that have been rocketing up. They're both up over 100% over the last year. So these stocks have been on fire. Now, my last video I talked about two stocks in my portfolio that hit 52-week highs, and I asked you, the viewers, to provide companies that hit 52-week highs in your portfolios, and I got really good replies of companies I've either never heard of or have not really looked into. So I thought it would be nice to choose a few and review them as potential investments. Now be sure to stay till the end, as I will list all of the 9 bonus stocks that people commented that have hit 52-week highs recently. And the reason why you want to look at these companies, you might think, well, they're expensive now. Well, they're also good performers, and for a reason, and there's a good chance they might keep going on and on and on for years and years. So the first of two stocks that I'm going to talk about that have been rocketing up is SoFi. Now, SoFi has been on a tear lately and is up 123% in the past year. That's amazing performance. But if we take it out 5 years, you will see a stock that has struggled and still has yet to return to all-time highs. But we are starting to see a turnaround, which I think can continue. Now, SoFi is unique. It's a bank, but not quite a bank stock. It's a tech-driven company and more. It's closely defined as a fintech company, but provides a lot more stability than your average fintech company. So this has led to volatility as investors try to figure this out. With this recent turnaround, would I deem this stock a buy? Well, let's look into it. Let's start with what exactly is SoFi. It's a fully digital bank, and at its core is a lending company. It actually started as a student loan cooperative. They pride themselves on being 100% online and easy to use for various financial services. So they have personal loans, banking, credit score and insights, mortgage loans, student loan refinancing, investing, private student loans, credit cards, insurance, and travel products and services that they offer. Now, to me, the best thing a company can offer is convenience to the customer, that easy to use factor, and that is king. And that's why I like Amazon so much and why it's one of my biggest holdings in my portfolio. And people will always choose convenience over other options. So we can say SoFi's demographic is younger users who like to deal with all their financial needs online in an easy to use manner, and SoFi has had members joining at a rapid pace with 756,000 new members in third quarter alone and a total member count of 9.4 million. And you'll see here since the beginning of 2020, it's growing quarter after quarter, and there you'll see that 9.4 million at the end, and the year-over-year growth at the bottom, you'll see it's kind of slowed, but as companies get bigger and bigger, of course that growth slows naturally because they gotta keep getting more and more market share. But they went from growing above 100% year over year to now 35%. That is still solid, amazing growth. Now revenue has grown 30% year over year, and you'll see here it's been a pretty clean growth. There's been maybe one quarter that dipped from a prior quarter, but overall this growth is awesome. And with net income, it swung from a loss to an income of $214 million over the trailing 12 months. Now, management is also guiding for further strong growth both in the revenue and the net income, which generates more positive profits. Now, lending still makes up most of SoFi's business and accounts for most of its profits. The company has given soft guidance here and expects lending revenue to match 2023. So yes, that might be somewhat of a negative, but what it offers outside of lending, the other financial services, is growing fast and increasing 102% in the quarter, and management expects it to increase 80% for the full year. Now you'll see here that there's the different segments. You have the lending segment, which is about $382 million in revenue. You have the technology platform segment, which is about 103 million, and then the financial services, which is growing fast as well as the technology, but the financial services segment has brought in about 238 million. And I would say the breakout between these three main segments is actually pretty healthy, and I really think that financial services segment can catch up and pass the lending segment, which will just make this company very well diverse and even between these three segments. And that's a good thing for investors. Now, the good thing with lending is now that rates are being cut, that could generate better results in their lending business. So though it's kind of slowed down, there could be some potential upside here in the near future. Now, the valuation for SoFi is expensive, and it's the main reason why people stay out of this company. And they're expensive when comparing them to regular bank stocks. SoFi trades at a forward 1-year PE ratio of 60, whereas typical bank stocks trade around a 10. So yes, it's 6 times more expensive on a forward PE ratio compared to bank stocks. The difference here is that SoFi is a tech stock and a growth stock, different from what your typical banks offer. It is still in an aggressive growth stage, which comes with high capital expenditures as well. So that's something you have to keep an eye on. But those high capital expenditures are there to help capture market share and develop its platform as this company is trying to grow. Now let's talk about the fundamental analysis. Keep in mind, this is something that analysts are comparing to the financial sector, so not the broader market. Now, we did talk about this stock being more considered a tech company, but I think a lot of analysts compare it to banks, so they do deem this company very overvalued. But SoFi is expected to grow at a high rate, therefore it can carry the higher valuation. Now, the quality is deemed low, but I think that's just the volatility factor, as it's a company that is still finding its grounding and trying to develop that wide moat. Now, growth stability is very high, and I think that's because we saw the growth in users is very sturdy. It's growing quarter after quarter. This company is also very healthy with its sectors outside of lending. So I think that's something that is proving that this company has a future, and that's what you need to focus on. Now, financial health is on the healthier side, and that's something that this company has been improving on. We saw their revenue growth, and we saw their net income swinging from a loss to an income. So yes, they're proving themselves here. Now, as far as a price target, again, analysts are comparing this to other bank stocks. So they see a downside of almost 36%, and it's a hold. But if you believe this is also more of a tech company as well as a bank company, and it has the high expected outcomes of a growth stock, a growth company, then I think this one is probably closer to an outperformance level for a long-term 5 to 10-year hold. But I'm just showing what analysts think. So would I buy this company? Would I buy SoFi? Yes, I would. But a small percentage of my portfolio would go towards this stock, maybe 2 to 5%. I think SoFi is proving itself that it is growing fast. It's keeping that growth. It's not slowing down. So as they get users stuck in their ecosystem, hopefully that means they are creating long-term customers on top of new customers, and their member base continues to see rapid growth. I see SoFi as a medium risk due to high valuation and competition. You think of PayPal, Ally Bank, there's a lot of other companies out there people can choose, and their size, right? Capital matters. This company is not one of the big tech stocks that has all this cash they can just deploy and kind of experiment with. SoFi has to be a little bit more laser focused on how they utilize their cash, and it has to work out for them. They have to see a return on it. Now, banks are not hard to switch, but they are not easy to switch from either. So they need to keep customers happy so they don't pivot and look at other options. Now, if the growth slows in either the lending side or the financial services side, and that affects total revenue growth, I would then reevaluate your holding, because it is an expensive stock, so it's demanding that growth and you need to see that continue. Otherwise, I think this stock should do well for years to come should they stay on this path. And yes, I would take a small bet on this stock myself, but I think this is one that I would keep on a watch list, and it would be something that during any weakness or dip, should you be confident and have some conviction of this company, then I would buy in that 2 to 5%. Now let's talk about another stock that one of my subscribers commented in my last video, and I looked into this company. It's very interesting and I wanted to cover it. And that company is Wix, more specifically Wix.com. Now with this company over the last year, they're up 128%, similar to SoFi. But if we take it out over the last 5 years, there's also some similarity where they kind of dipped from all-time highs. They kind of took a crash, but they've been recovering ever since. And most recently, they've been kind of rocketing up. So Wix is a cloud-based website design and development platform. It offers web templates, web editor, web builder, search engine optimization tools, logo maker, web hosting, and electronic mail marketing services. Wix is the leading SaaS website builder platform globally to create, manage, and grow a digital presence. What began as a website builder in 2006 is now a complete platform providing users with enterprise-grade performance, security, and a reliable infrastructure. Now it's offering a wide range of commerce and business solutions, advanced SEO and marketing tools. Wix enables over 200 million users to take full ownership of their brand, their data, and their relationships with their customers. With a focus on continuous innovation and delivery of new features and products, anyone can build a powerful digital presence to fulfill their dreams on Wix. And this company is focusing and going heavily into AI, and that's really been helping them grow, which we're going to talk about in a little bit. So just taking a look at more of their products and solutions, under their products, you see web design, website templates. You see that they help restaurants manage their menus, orders, and reservations. They have, e-commerce, they have web hosting, so on, and so website security even. So they have a lot to offer here. And under solutions, they have payment solutions, mobile app solutions. They have a CRM system. They have agencies and freelancing. They have a lot here to offer as well. So with that said, let's look at some of their highlights, financial and other. So we'll see here that their total registered users is at 278 million. They have an annualized recurring revenue, so that's their creative subscriptions, of 1.3 billion. They have 5,300 employees. Now, the percentage of revenue from outside of North America is 40%, so they're kind of highlighting here. They're not so concentrated in one area, and that reduces risk. They have a gross payment volume of 3.3 billion, and they have transaction revenue of 54 million. This is all of third quarter. They have partners revenue of 155 million and a free cash flow margin of 29. Now, some areas just to mention before we kind of look more at the financials is they're strengthening tailwinds from key AI innovations, and this is bringing in business. And again, I'll continue to mention this throughout this talk about Wix. They're also raising full year bookings, revenue, and free cash flow guidance. That is music to an investor's ears. They have ample room for future growth acceleration and continued margin expansion in 2025, and net cash provided by operating activities for the third quarter of 2024 was 129.8 million, while capital expenditures totaled 2.1 million, leading to free cash flows of 127.8 million. So they're managing their expenses well, they're bringing in operating cash flow, and it's creating a great situation for free cash flows. Revenue's growing 13% year over year. You'll see it broken out quarterly and annually there. That's good growth. As long as it's in the double-digit range, that makes me happy. Annualized reoccurring revenue, the subscriptions, is growing, and it's expanding at 11% year over year. So again, it's just in that double-digit range. I'd like to see this accelerate more, but it's still healthy. To me, it's still acceptable. If we look at total bookings, now total bookings refers to the overall number of appointments, classes, or sessions that have been booked through the Wix bookings feature on a website, including both confirmed and pending bookings. So essentially representing the total number of service reservations made by customers through the platform. And this one's very important. So it's growing 16% year over year, and that is very healthy. We want to see this continue. Then if we look at the partners momentum, they said it's been tremendous, and yes, it has. It's up 30% year over year and 74% over the past 2 years. Now, partner revenue is defined as revenue generated through agencies and freelancers that build sites or applications for other users, as well as revenue generated through B2B partnerships such as LegalZoom or Vistaprint, which is the resellers. So this is great to see here. This is fast growth that I think is a great opportunity for this company. Now moving to transaction revenue growth, we'll see here that it's growing 23% year over year. So it's picking up because over the last 2 years, it's been 36%. Now transaction revenue is a portion of business solutions revenue, which they define the transaction revenue as all revenue generated through transaction facilitation, which is primarily from Wix payments, as well as Wix point of sale shipping solutions and multi-channel commerce and gift card solutions. So an area that's growing fast. Then we get to the free cash flows, an area that I really like to look at, and we'll see here free cash flows is growing. And you'll see the orange line is free cash flows as a percentage of revenue, which is improving massively. And this is a great thing to see. Now, Wix has been delivering great performance and beat analyst expectations in their last earnings. Their growth is accelerating faster than expected thanks to its generative AI tools, and AI is helping onboard more customers to create websites and adopt other software products. Full year guidance has been raised as mentioned, so all good news from the free cash flow, the AI, the future guidance. Really good stuff here with Wix. Now, investors in software companies focus on something called the Rule of 40, and it's a way to balance expectations for top line growth and free cash flow generation. Investors want to see the growth rate and the margin add up to at least 40 because that indicates a good balance of growth and profits. And you'll see here, Wix is on pace to surpass this Rule of 40 this year with a growth rate of 14 to 15% and a margin of 27 to 28%. That is excellent and something you want to keep in mind when you're looking at other software companies. I had no idea about this so-called, Rule of 40, but it's a good one to look at. Now, if we look at their fundamental analysis, they are considered overvalued, just like with SoFi, but this one's of high quality, it's of high growth stability, and it's more on the healthier side when it comes to financial health. As we saw, this company's doing very well with everything we've covered. Now, with analysts, they consider this one an outperform, but it has a very low potential upside of 3%. So again, I would say for me, would I buy Wix? Yes, I would, but I would still keep it that 2 to 5%. I would say SoFi would be 2%. This one would make up 5% for me. So that'd be 7% total in my portfolio if I were to add both these companies. But valuation has run up because this company's been doing so well, so that makes sense. But all indicators signal a financially healthy and growing company. Competition is also something to keep an eye on with this company, as there's Squarespace, there's Shopify, there's GoDaddy, there's other players in the market that this company has to constantly fight against. So it's one I'm going to put on my watch list, and I think it's something that you should consider as well. It's a fascinating company. Thank you for providing that, and also the other person that provided the SoFi recommendation. So to provide you with the other companies that hit 52-week highs, here are what my subscribers provided that are in their portfolios. It's C Limited, The Honest Company, Cellebrite, Axon, Brookfield Corporation, Brookfield Asset Management, Blue Owl Capital, Visa, and of course SCHG, Schwab's Large Cap Growth ETF. Now, what we want to do here, this is what's beneficial about being a part of this financial family on this channel and subscribing, is we get to throw these ideas back and forth. All these companies that I mentioned or talked about today are hitting 52-week highs. And there has to be at least a handful or a small percentage of these companies that'll keep hitting 52-week highs for years and years to come because they're outperforming for a reason. So I'd put all these companies maybe on a list for you to look into, and maybe they'll make your watch list, and maybe they'll make it into your portfolio someday. So let me know your thoughts on SoFi and Wix. Would you add these to your portfolio and bet on high growth, or do you think their high valuations are not worth it? I think companies like SoFi and Wix are going to be more volatile and should not be used as short-term holds. You have to keep a closer eye on these companies compared to a company like Microsoft or Amazon. Due to their high valuations, any weakness can send these stocks crashing, but if they sustain that growth, widen their moats, and become more and more profitable, then these stocks should keep soaring and rocketing up. So thanks for watching, and we'll see you all next week on Mark Arnold's Finance.